Okay, boom, 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 rocking and rolling. This next topic should be super easy points. Okay, so we're going to learn about our fundamental qualitative characteristics as well as enhancing qualitative characteristics. Trust me, getting a 75 on the FAR exam is going to be difficult enough. Okay, so don't blow this off. I know in the grand scheme of FAR, this might not seem that important, but you're going to be kicking yourself if you blow this off and you get one of these questions wrong. It's got to be automatic. So when we think about our fundamental qualitative characteristics and our enhancing qualitative characteristics, we're going to think about something that a very wise person once told me when I first thought about studying accounting. I was sitting there, I was thinking, do I want to study accounting? I really like the idea of being one of those cool finance kids and get a finance designation, maybe both. Okay, but this person told me, Joey, think of accounting as the grammar of money, whereas finance is more so the fine literature. In order to understand the fine literature, we must first master grammar. So when you think about the fundamental qualitative characteristics, you're going to think about what that wise person told me. Okay, so the fundamental qualitative characteristics represent the grammar, because grammar is fundamental to understanding the information that is written and presented in the financial statements. Remember, the financial statements is really just a bunch of information presented to the primary users, who are who again? Investors, creditors, lenders, not regulators. Okay, we got to know it. Okay, so that being said, we got to think about our enhancing qualitative characteristics more so as the fine literature. Okay, when it comes to presenting financial information to the financial statement readers, right, this is information that is sort of in the nice to have bucket, but it's not fundamental. It's not pertinent to the reader's understanding. So before we dive into it, let's start by defining the word qualitative. Qualitative means related to or measured by the quality of something rather than quantity. So this is more of a conceptual topic. Therefore, we must first understand the definition. Let's learn how to walk before we learn how to run. Okay, so we need to understand this at a fundamental level, no pun intended. Okay, so what fundamental qualitative characteristics are ultimately going to do is enable financial statement readers to have financial information that are considered both relevant and reliable. Okay, so qualitative characteristics are not going to be quantitative characteristics, and therefore they're not going to be providing numerical or quantitative information, but rather more subjective and conceptual information. Okay, so these characteristics are going to be used to identify information that will be most useful to investors, existing and potential lenders, as well as other creditors. So let's start at a high level and break it down to the basics. So it's only going to be appropriate that we start with the grammar, which is the fundamental qualitative characteristics. So as we said, there are two fundamental qualitative characteristics. So the two primary fundamental qualitative characteristics are going to consist of relevance and faithful representation. We got to ask ourselves, is the information that is being presented relevant? Is it reliable? Okay, so reliable is more or less synonymous with faithful representation for this purpose. Okay, so when you think about the fundamental qualitative characteristics, let's remember a couple of sentences to engrave this in your brain. So when you think about relevance, you're going to remember the sentence, in order to confirm your relevance, you must predict trends in clothing material. And when you think about faithful representation, we're going to remember the sentence, when it comes to faith, being completely neutral will set you free. All right, so I know you're thinking, wow, how profound. All right, so now let's break this down into the details. So we got to memorize, and I hate the word memorize, but we got to do it. We got to remember the three elements of relevance. The three elements of relevance are going to consist of predictive value, confirmatory value, and materiality. Right? In order to confirm your relevance, you must predict trends in clothing material. Okay, so predictive value is basically saying, can we, the financial statement readers, use the financial statements to predict future information? Okay, whereas confirmatory value is basically saying, can we use the financial statements to confirm or change previous determinations? And finally, materiality is basically asking ourselves, is all material information presented? When it comes to faithful representation, we're asking ourselves, is this information reliable? And the three elements of faithful representation consist of completeness, neutrality, and freedom from error, right? When it comes to faith, being completely neutral will set you free. Okay, so when presenting this financial information, we want it to be complete. Financial statement readers are going to ask themselves, is this all the pertinent and necessary information? Are the financial statements presented with a level of neutrality? Right? Is this information reported without bias? Whereas freedom from error, we want to know that the information is going to consist of information that is reported without omissions and errors. All right, so bottom line is we got to know the two fundamental qualitative characteristics. We got to know the grammar. Before we can run, we must be able to walk. So we got to know relevance and faithful representation. When it comes to relevance, we got to know predictive value, confirmatory value, and materiality. Once again, in order to confirm your relevance, you must predict trends in clothing material. When it comes to faithful representation, we want to know completeness, neutrality, and freedom from error. When it comes to faith, being completely neutral will set you free. Okay, so now that we know the fundamentals, right? Now that we know the grammar, let's dive into the fine literature. Let's talk about the enhancing qualitative characteristics. Okay, so this stuff is in the nice to have bucket. The fundamental qualitative characteristics are in the required bucket. So what is considered nice to have when it comes to the presentation of the financial statements? This is going to enhance the financial statement reader's understanding of the financial statements. We want to make sure that it has comparability. We want to make sure that it has verifiability, timeliness, and understandability. Okay, so comparability enables financial statement readers to have the ability to compare differences and similarities with the financial reporting entity. Verifiability enables financial statement readers to verify the accuracy of the information being reported based on outside parties' ability to reach the same conclusion. Okay, so in other words, can we verify the accuracy of the financial statements? We got timeliness. Timeliness enables financial statement readers to obtain information in time to have the ability to reach their decisions, right? We want to know, can we grab this financial statement information in a timely manner? And finally, we have understandability. Understandability enables financial statement readers to have the ability to characterize and classify various components of the financial statements that are being presented. Okay, so in other words, are the financial statements easy to understand?